Hey yo, speak my rants and gems. Speak my rants and gems. Y'all can do it, we discover. Peace to all the kings and the queens where the mother lie. Speak my rants and gems. Speak my rants and gems. Y'all can do it, we discover. Peace to all the kings and the queens where the mother lie.
All right, guys, welcome back to another episode of Rants and Gems. My name is Matt Garland, NMLS number 58700, but better known as International MG.
And my name is Quiana Watson, broker extraordinaire, #international, license number 317576.
Yeah, and we're back with another dynamic episode. We are live in London right now, and we're coming to you live from Stork restaurant here in Mayfair, London, the heart of London. All right, so next time you guys are in London, make sure you guys pull up. We're gonna put all the information in the description. The food, the vibe, the hospitality, everything is A1 here. So check them out when you guys come to London.
Hey, you guys, we are coming to you live from London, and we were wondering why aren't they a part of our community?
Look, if you're not part of the Rants and Gems gym dropping community, you're doing yourself a tremendous disservice. We got live events, behind the scenes, live Q&As with our guests. You need to be a part of the community.
You got to be a part of this community so you can ask questions to all of our guests, so you can interact with us, vibe with us, get exclusive behind the scenes footage. I mean, we're going to have everything you need in our community. So y'all stop asking questions on Instagram and join our community so you can get the real answers.
Exactly. So link is in the bio. Join the Rants and Gems certified gym dropper community today. Get behind the scenes action, live Q&As, free access to all of our live pop-ups, and the Rants and Gems live experience tour. So don't wait, don't hesitate. Link in the bio. Join today.
See you soon, gym droppers.
Peace.
So we have Kaz here, right?
Yeah, right.
And what I learned about you is that you are definitely a property developer. You flip property. You have some funding that you want to talk about. So you pretty much do so much here in the UK, right? So you started with the conventional route. You just started going to school, and you end up being a college dropout.
I did, and then I went back because I might have been a house dropout if I didn't go back and finish. So I did go back, but whilst like still doing business. So I think that was when I opened the shisha or the hookah bar, and then was going to university at the same time as running a business.
Okay.
So
you've done a lot in the industry, and you actually have a lot to bring to the table. You've been in the industry for about 7 years, right?
Yeah.
And you've actually done about 20 million plus of deals.
Yeah, GDV.
Wow, that's amazing. That's around 40 deals.
Yeah.
And you raised $1 million in private funding.
Yeah, that was like near the beginning of my journey, and obviously you have to, the money you've got like can dictate what you can do. So that was about 5 years ago. Repaid it back to investors within a year, and since then I've just been working from my own capital.
Well, thank you so much for coming to the Rants and Gems show. We are excited
to
really hear about, thank you for having us.
Absolutely.
The hospitality here has been amazing. And we're excited to hear more about your journey and what you offer as an investor here in the UK. So I think the best way to get started is let's let Matt top it off.
When did you fall in love with real estate?
I think it was on my first deal. Like the first property that I bought was I wasn't in the best situation in regards to credit, so I couldn't go and get a conventional mortgage. I had to take what's called a bridging loan.
Okay.
I think it's the equivalent of like a hard money lending.
Absolutely.
So I had to do that. It was an auction property, and it was like, when I first did it, I think I was 22, something like that. And my broker, who arranged the finance for me, because it was like an auction property, called it like a baptism of fire, because it's like a lot of pressure with taking the bridging loan and stuff like that. But it was seeing what it could do, like in terms of taking a property in a rundown state, improving the condition, and a few things. One, the good thing is making money from it. But two is also seeing somebody as like a first-time buyer that's fallen in love with the product that you've created. So that you're making money, but you're also creating homes for people, which is great.
And that made you say, you know what, this is what I gotta do.
Yeah, this is me.
So how did you go from that first deal to now doing over $20+ million in transactions?
It was just a case of, you leverage and you grow, and when you realize something works, like, there's sort of a saying in London that, like, there's so many chimneys, there's so many houses that if something works, there's another 200 houses on that street, then there's another 100 streets that look just like that. So you can repeat that process and make it work for you. And then you get more comfortable, your tolerance to risk goes up. You can then do bigger deals that require maybe like planning permission, which is like zoning, I guess, like to be able to create more value because you're adding, further value to these projects.
So how are you analyzing your deals, right? So someone's in the UK, they're a first-time investor, they don't really know too much, right? How do you go about and analyze your deals to know if it's a good deal or not?
So for me, like to analyze a deal, I would say that you reverse engineer it. So you start backwards. So you start with your GDV, like when you finish the project.
What's GDV?
GDV, say it one more time.
Gross development value. So that's effectively whatever you're doing. If it's a single unit, what that's worth. It's a collection of units, like 10 flats, what they're worth as a whole. So you start with working out what that is, and that's where you would use your comparables. So you find properties in the same area, same condition, same amenities, that's like garden space, parking, etc. And then you benchmark them against your own to say, okay, this is what when we finished and we've done it to this great standard and we've got the team in, this is what it's going to be worth at the end. Okay. Then when you know what it's going to be worth, you've then got to work out what your build cost is to take it from where it is at point A to point Z. So with your build cost, you can either engage with, if you're not confident to do it yourself, get quotes from local contractors and using multiple contractors. Once you know what your build cost is, you then take into account a really important part that a lot of people miss, your cost of finance. So knowing what it's going to cost you to fund this purchase. You've then got your associated sales costs. So in the UK, we have something called stamp duty. That ranges depending on like if it's your first property or a second property, investment property, and it's like a tier that gets higher the more expensive the property is. Okay. So you take all of those, you say the GDV minus all of those costs, then minus what you want to make as a profit margin, and that can then determine what you can pay for said asset to make sure that it works for you.
Reverse engineering, knowing your costs, knowing your comparables, and I think that's important, right? Because too many times first timers want to go into this business and not really understanding what the true cost of it. Because everybody on the internet, I'm pretty sure you see it, oh, I made this amount of dollars or I made this amount of pounds, right? And everybody glorifies the success in the gross. But no one's really talking about the net and all the expenses that come along with doing these type of transactions. So what kind of advice would you give, like 3 steps to someone to find out like the cost, the expenses, to make sure that they're analyzing their numbers properly?
I think that's on my background when I did finally go to school was economics, which meant that I was a numbers man, so I like spreadsheets. So I work out on my spreadsheet, and it's a case of like you can't try and make the deal work for you based on what you want it to do. You have to let the numbers determine what's realistic. So things that you can just find out. So if you're not sure what your stamp duty is, you can use the online stamp duty calculator to determine exactly what you've got to pay for the property. You then need to think about all of the associated costs, and they differ depending on the type of development. On a small scale, if it's just a straightforward refurb, then you've just really got your finance costs, maybe some utilities like gas, water, electric, council tax, and the refurb costs. But on a larger scale project, you've got all different sorts of things that you need to consider. So you've got like community infrastructure levy, which is effectively another like tax or fee that you have to pay for developing the properties. You might have the cost of bringing in new services, because if you create new homes, you've got to bring in new gas, new water, new electric. You maybe have to block the road, you've got to pay for like permits to do that. So it's understanding all of these things and all these associated costs.
How long is the permit process? Because in America, depending on where you are, what state you're in, every municipality, every county, everything is different.
It varies.
Right? And it varies.
America, because I was out there recently, right? And I was looking into it, and I'm looking at some stuff, but then when I'm finding out, like, you guys like permits and zoning just seems like a minefield of understanding.
It's a nightmare sometimes.
And it can be the same in the UK. Like, it's kind of like how long is a piece of string sometimes. So it really depends on, because you could get the permission, but then the council, so like you said, like the independent body then have to go to the people who control the roads. So like in London, it's Transport for London. So you're working with different bodies and different departments, and I think that's where, although you can't determine that day one thing that you have to do with any type of investment is stress test it. So what if you had to hold the finance for 12 months rather than 6 months? What if your build costs go up? So I think you've also always got to make sure you've got that contingency and do a what if analysis when looking at deals.
Oh, that's good.
That's good. So the process could be as long as a string.
Yeah.
But if you know what you're doing, you can get it done pretty quick.
Yeah.
And as far as your developments and areas that you're focused on, what are some areas that you feel like, I mean, not to give away all your gems, but what are some areas you think will be great places for someone to invest here in the UK that will give them some great return?
Can you give us 3 areas?
At least 3.
Yeah, okay. So I think it depends what you're after, because the main thing with investments and any type of property investment is to know the right answer for you depends on what you want to get out of that property and that investment.
I'm gonna clarify my question. Give me an area to flip, give me an area to buy and hold, and also give me just an area that would be good for Airbnb income.
Okay, so when you're talking Airbnb or serviced accommodation in the UK, for me, the high end is the best, because you get that real premium, that real uplift. You're where we are right now in Mayfair. You're even as a 1 bed, you might be looking, £400 or £500 a night and upwards, depending on where they are. So you can get really good returns. So Central London, Zone 1 for Airbnb and serviced accommodation for me is my preference. Like I like nice properties when we're looking at serviced accommodation. To hold for the long term, there's a thing that I always say, you kind of follow the money, right? So when you can see investments in infrastructure, whether that be new transport links, new shopping centers, where there is that investment, generally the big companies spend a lot of money to work out where is going to be the next gentrified area, where is going to be the next big thing. So for me, Woolwich is really hot right now, because it's on the water. You've seen what's happened in the past with areas like Brixton and Battersea, and they've gone ridiculously high in value over the last 10 years, and I think you'll have that same trickle down effect for an area like Woolwich. So for long-term holds, really good investment opportunity. For flips, it's not area specific. It's where can you buy at the right price? Because the number one thing I learned in property is you don't make your money when you sell, you make it when you buy it day one.
Absolutely.
So
that is a
for
fact.
me, it's wherever you can make the most money if you're flipping.
Okay.
I like that.
I love that.
Follow the money, basically, when you flip. And that's the same thing in America, right?
Yeah.
You make money when you buy, not when you sell. Who cares where the area is at? What's the numbers? Do they make both sense and sense? Right?
Exactly.
And that's what it goes. So now, you're flipping. So primarily your business is flipping right now, right? Because you want to build that capital so that way you can put that into long-term money. Now, hiring a team. I know in America, a lot of people are intimidated by doing real estate investing because they don't know contractors, they don't know mortgage professionals, they don't have good real estate brokers. Like, how do you over here in the UK build out that team to help you, or the power team to help you reach your real estate goals?
So I can speak on myself. Personally, I've grown with the people I grew up with. So when I speak on my architect I've known for 15 years, grew up in the same area as me. My accountant, we went to school together, I've known him for 20 years. And some of the people, we trust each other because we generally want each other to win. Yes. So maybe he wasn't, my architect wasn't ready to do, he hadn't done as big a project the first time. I was like, look, let's go and do this, conversion. But I trusted him and he put all of his efforts to make sure it works. Now he's killing it and he's doing way bigger projects than I was doing, and vice versa. And you build with people like that. If you're not fortunate enough to have those people in your network, then I think personal recommendations go a long way. For me, that's it. Whenever I'm looking at new contractors, I need a personal recommendation.
Oh, yes.
Beyond the personal recommendation, let me come to one of your sites. Let me speak to your existing clients. Let me really get a feel. And then lastly, it's actually, again, same with everything, you've got to de-risk yourself. So let me go on company's house. Let me see what your turnover is. Let me see if one project goes wrong, is that going to cripple your business? Because you don't want your project to be funding their ability to to continue trading.
Absolutely. Now, you've been flipping for years. We're in the end, I think, the end of the pandemic. But how did COVID-19, as an investor, especially flipping, right? Because you need materials, supplies, everything like that. How did COVID-19 impact your business?
So initially, it was like, you know, first lockdown, everyone was like, we got to stay home, right? So
Right.
everyone was just at home. So everyone else was at home. So I was like, well, I'm at home as well then. But
Yeah.
then a couple of weeks I realized, like, you know, construction didn't stop, business didn't stop. But one thing I did do is when you've got a time to slow down and reflect, that's also an opportunity to actually focus on the business and work on the business itself. So that's where we sort of took to social media, started telling more people what we did, and the social media element of the business has really helped. That's like now our in-house marketing team. So we use that to source deals, raise finance.
Wow.
But beyond that, really actually be able to talk to people and say, look, this is what I'm doing. Because for a lot of people, when they think property investment, the people don't look like us.
Yeah.
Like,
Correct.
but when they see someone that looks like us, it makes it more tangible, more believable, and like, you know, it kind of like can make people feel like I can actually do it.
Yeah.
So that's one of the good things that COVID's allowed me to sort of put myself out there and kind of tell my story a little bit.
I love that,
I love
because sometimes we look at social media as, oh, you know, you just get on here, post a pretty picture, but you're using your social media not to like brag about what you do, but to also show people what's possible. And beyond that, you're sharing parts of the process. So
Yeah.
now they trust you and they'll invest in your funds and things like that. And speaking of funding, how do you, we call it crowdfunding in America. I guess it could be the same thing here. How are you going about doing that, and how did you start?
So, like I said, to start with, I raised the money from my first business, which was the shisha hookah business
Yes.
in the US. Like, that's how I raised money to my first deal, and it was pretty organic. And then I wanted to scale up and do bigger deals. So I had a single investor. I mean, the UK, like, you know, we've got a lot of like the Financial Conduct Authority, and when you're dealing with like lower value investments, it's classed as retail investment, that there's a lot of kind of red tape around, so you have to be careful of how you take investment. But at the moment, I don't have any investors. Like, it's all just in-house, and we work with, you know, the brokers to provide like the principal lender, and then we put down our deposits, generally sort of anywhere from 25 to 30%. But there's loads of, you know, there's loads of creative crowdfunding ways that, you know, you can work to scale. I think this year I'm going to be scaling more by doing joint ventures with other developers or with other investors, more so people that are maybe cash rich and time poor. So they'll put money in, but they'll get, you know, a percentage of the return, which means they get a good return, and I obviously get more money to work with to scale.
Right. I love that. That's a great concept, you know?
Yeah, no,
cash
exactly.
cash rich, time poor. And that's what an investor is. An investor has the money. They may not want to even learn or want to go out to the site. They just want to make sure they get a
Yeah,
good
they don't want to
return.
roll up their sleeve.
Yeah.
But it's like, you know, if you're a specialist in something, right? Like if you play football, or if you're like an artist, like sometimes like focusing and specialization is what was going to make you the most successful, because you focus on you and let somebody focus on what they're good at. And that's why, like, you know, again, it's like economic principles, like the benefit of trade. Like, if I specialize in one thing, you specialize in the other, and we trade those resources, we're both going to be more successful.
Collaboration is greater than competition.
Yes.
Right.
You know, at the end of the day, look, I mean, you give a lot of information right now. It's so much like to unpack what you're saying, especially collaborating with other investors. And I think a lot of people don't do that enough.
Yeah.
You know, especially new investors who want to come to the market. They may not have all the capital to get these deals funded and put together.
Yeah.
So it's always good to, you know, like you said, combine the resources and keep it moving from there. But where do you see like the market going in the UK? Because I know in America it's up and it's stuck, right?
Right.
Home prices are through the roof, and it's
Yeah.
continuing to go, and it's becoming a little bit tougher to find deals.
Yeah.
Good deals where you can make the money.
Yeah.
Is it the same problem you're seeing here in the UK?
It's the same, right? It's the same, like that. You know, it's becoming a lot more competitive. You know, whenever people are not really sure, people kind of go back to more traditional investment vehicles like bricks and mortar. So it becomes harder. But for me, like, you know, I look, when it's hard, you need to solve problems. So I look at properties that maybe have structural issues, have issues with the title, have, you know, all sorts of different issues, and you find a way to solve those problems. And I think in property, one of the main things, you know, when the market's tough, is you've got to be able to see what other people miss and add your own value.
Yes. See what other people miss. That's a gem.
Yeah, I was just repeating that in my head. See what other
Me too.
problem solving.
Yeah.
See what other people miss. Add your touch to it, and then you make the deals happen that way.
Exactly.
Because a lot of people always just look thinking the deal's gonna fall on their lap.
Yeah.
And it's not the case. Like, we try to tell people, like in America, if a house is on the market, I would say probably more than 45 days, hey, that's an opportunity right there, because
Correct.
the inventory is like scarce right now, right? And if it's 60 plus, then hell, you could probably go in there and really negotiate, because it's too much time on the market. It's kind of the same thing over here too.
Yeah, it depends. I mean, you know, different like sellers, vendors are in different positions. So some people are just, they don't need the money. They're like, if I don't get this number, I'm not selling. But yeah, even sometimes it's just a case of just really being able to make it work for you. Like some of the deals I bought recently, like we have like property auctions, and like sometimes stuff doesn't sell. And if it doesn't sell, you'd assume it can't be a good deal, because you know there was however many people in the room and no one picked it up. But some of the stuff I bought recently, both of them didn't sell, and realized, okay, because it didn't sell, we can negotiate better terms. We could take those terms and be able to resolve some of the issues. And again, that same thing of turning it into a deal that worked for us.
What's the process of buying properties at an auction here in the UK?
Okay,
Took the words right out my mouth.
Great minds think alike.
Right.
So with auction properties, generally speaking, so this fly is just chasing me.
I saw.
Yeah, so with auction properties, generally speaking, you know, you either have to use a bridging loan or a hard money loan, or be a cash buyer. Reason being is, generally speaking, once that gavel drops and the hammer drops, you've bought the property, so you pay your 10% deposit instantly day one, and then you've got 28 days to complete on the property after that.
Okay.
Which means that you don't have the normal time you would have to do the relevant due diligence to like make all of like do all the legal checks.
Yeah.
So you get a legal pack beforehand to review, but effectively once that hammer drops, you've bought the property, and if you don't complete or you fail to complete within those 28 days, then you lose your 10% deposit.
Oh, so you got to be prepared.
Yeah, you have to be ready 100%.
Yeah, you can't be going in there like you got to be big stuff.
Yeah,
but
like,
that's good though. I
yeah.
mean, at least it's 10% down. You know, as opposed to the States, they want cash only.
Yeah.
Okay.
When you go to the auction, you go to the courtroom steps in America. If it's $30,000, they need $30,000.
Oh, on the day.
If it's $100,000, they want $100,000.
Okay.
So that's a really good gem. At least they can put 10% down, 28 days, and then kind of get the rest of the money up.
Yeah, no, that's interesting. So is there like, how do you know what's coming on auction?
So there's like a website called AIG or EIG that has like a listing of all of the auctions that are coming up. But you can search all of that. Like in London, we've got Alsop's, Savills, McHugh's, Auction House London, like the main auction houses, and you know you just register with those, and they'll be telling you what's coming up. And generally, they have like sort of 200 plus lots. You know, with COVID, it sort of changed. It used to be you go to the room.
Yeah.
Whereas now that they've added the online feature as well, we can do it over the phone. So you register, you have to like lodge a deposit with them in advance, depending on how many lots you're planning on bidding on.
So you have to tell them in advance, okay, I want to look at plot A, B, and C. So
effectively, depending on which auction house it is, yes, but for a lot of them, they might say, okay, you've got to put down a £5,000 or £10,000 deposit for each lot that you want to bid on. So if you're potentially looking, you know, you might only win 3, but you'd have to put in.
You gotta put your money up first.
Put your money up to start with.
So you have to tell them, all right, these are the 10 plots that are properties I'm looking at, and here's my 10% for each of them, and then now that gives you access to
maybe
them.
not 10%, but like a fixed amount for each of them.
Okay.
Yeah.
But then that gives you access
to be able to bid
and
online,
then if you lose, then you get your money back.
Yeah, 100%.
And you bid online.
Yeah, you can
So
bid
that's a
online.
benefit.
That's
dope.
different.
That is because I had some bad experiences where I missed an auction where I thought, okay, I'm gonna go and buy it, so I missed it. Like it was traffic and ended up losing out. So the fact that you can do stuff online now is good as well.
No, that's smooth. That's there's a couple like websites in the States like auction.com, things like that, where you can go on and you can bid from your living room, from your computer, or your laptop, or whatever. So it's kind of similar to the same thing. But as an investor, where do you see the market going though? Like, what do you think is going to happen, especially potentially a war is about to happen and things of that nature.
Yeah.
So what do you see the UK market from an investor standpoint? Where do you think it's going?
I think like at the moment where, like you said, prices are high. Like they've gone back to their peak that they were at. Now, long term, I see prices going up, because when you look outwardly at the property market, you see an upward trend. Now, if you zoom in, you see peaks and troughs, and the markets are cyclical. It's sort of based on like markets, like the market cycles. Realistically, there should have maybe been a drop, sort of 2019, around that sort of period. That didn't really happen. and I think it really just depends on a lot of the time, government policy and what they do to actually like keep the house prices buoyant. Like at the moment, we've got really low interest rates,
Yes.
which are helping with the property market. Those are projected to go up over the next 12 months, so they're going to potentially have a deflationary impact on the property market. But I think for me, particularly, when you invest like in your New Yorks, your Londons, your Parises, your hubs, your places where everybody wants to be, even when maybe the rest of the country isn't doing as well, those areas that have demand from overseas investors, from, because that's where business is, that's where people have to live for work, generally there's a lot more stability. So I still feel that London will be, somewhere that I'll be looking to invest in the long term.
Agreed. It's like New York.
Yeah.
You can't go wrong.
It's
if you got
consistent.
the right property.
Exactly.
You can't go wrong.
So let's talk a little bit about like you do development, you also flip property. So I can imagine that you have a really extensive list of general contractors or people that you work with. In America, we have to have GCs and people to oversee projects. What are the processes here when people are flipping a property or developing a property?
A lot of people do different things. So for me, depending on like my type of contractor, where I've got like a foreman that I've worked with for a while that knows the standard of stuff we do, they'll effectively just project manage everything, and they'll just be given like the schedule of works, be given the oversight, and they might work off full construction drawings, which almost makes the process a lot more like IKEA furniture, because everything is predetermined with what they're doing and you're just doing quality control. With the smaller scale projects, sometimes I'll independently project manage myself, like the individual trades. And then we have like an in-house project manager as well.
That's good.
Yeah,
having an in-house project manager is amazing.
Yeah.
That probably was something that you learned along the way, right?
Yeah. Like so, it's a passion as well, because I genuinely actually like to see the finish and to see how properties look afterwards. And I said that idea of sometimes people coming in and just seeing it and they can't believe the finish. It's amazing.
Yeah.
No, that's dope. I wanted to ask you about what do you call it? Bridging financing. Cool. Like that's our hard money, right?
Yeah.
Right.
So what kind of terms do you guys get for those type of loans over here?
So generally they're like a maximum of sort of 24 months. Most people take them for sort of 6 to 12 months.
Okay.
It depends on the size of the project and what you're doing. Your rate is dependent on your loan to value, so the amount of the deposit you put in. Sort of, I generally put in 30%, which means you sort of get like a middle ground in terms of your rate, maybe 0.7% a month.
Monthly.
Yeah.
So you're paying the monthly interest on it.
Yeah. So the monthly interest. The other thing is because people do it in a different way, but generally what I do is pay my interest in advance. So let's say, for example, I was gonna borrow £70,000 with a 30% deposit, so 70% loan to value. My gross loan would be 70,000, but the net advance they would actually give me is maybe 63,000 because I paid my fees in advance. And that means effectively you're not thinking about having to make the monthly payments, because it's just the cost of doing business. And if you end up doing the project quicker, then you get a refund.
Reimbursed.
Exactly.
So you do it just for a peace of mind, and you're at a point right now where you can afford to just say, you know what, I'm gonna pay everything up front.
And the other side of it is as well, if it's with like bridging loans or hard money loans, is one of the good things about them is they're more accessible. Now, if you're not paying in advance, you have to then show like affordability, like how are you going to afford these payments for the duration of the term of the loan. So if you pay it in advance, you avoid that. So for people that maybe are in a position where they've got an element of the money but don't have the credit or the income, then it makes property development more accessible to them as well.
That's good.
That's actually really good.
That's a good way to really like think about it.
Can us Americans qualify for these type of loans over here if we want to invest? Is like a stipulation that you have to be a UK citizen?
I think like through like anti-money laundering and stuff like that, it would just depend. As long as you can bring your money in, you show your proof of funds and etc., you can bring your money to the UK. But I think the best person would be Seb, the mortgage guy.
That sounds like a question for Seb.
That sounds like a Seb question. Exactly. But no, that's good to know that it's there, it's available.
Yeah.
You can pay your fees in advance. That way you don't have the headache. And the 65 ARV is kind of like the same thing that we look at too over in America is where you want to be. But no, this has been a lot of information, man. So look, leave us with one more last rant and another gem for our audience.
My rant would be that there's enough money for everybody. Like, you know, we can talk about money and you can tell me what you're doing, I can tell you what I'm doing, because there's so much money out there. The more money you make, the more you realize that there's enough money out there for everybody to make. And you can't hold that information in your hand. Like, it's not going to get you anywhere. Like, collaborating, working with people, having conversations, networking is really what's going to take you to the next stage and elevate you.
Agreed.
Agreed. And what's your gem?
My gem. It's pressure now, isn't it?
Pressure. You got it.
Pressure. I'm gonna have to have like a fake drink of water while I pause. But I'm thirsty. I'm not just thinking. I promise.
Listen, we need to know a gem. You know this industry. You know everything about the market. Give the people a gem. Someone that wants to develop or flip a house.
I think that the idea of, you know, it's something that's used so often, and people talk about the power team and the people around you, but it's like, you know, you're not going to be able to do everything and know everything. Like, if your business only has you in it only has the potential of you. Whereas if you work with the right people, so get the right financial advisor on board, get the right accountant, get the right architect, then your business can now be like, you know, can now 10x, because you have the potential of all those people combined to grow. So I think really just making sure that you're working alongside the right people and getting the right people in place to allow you to facilitate that growth.
Dope. Agreed. Big gem.
That's a big gem.
Yeah.
It came from the water.
So look, man, tell the people how to find you, how they can tap in with you. Let them know.
So I'm Kaz from Property by Kazi. We're on YouTube, we're on Instagram. That's the main places to find me. So that's Property by Kazy. See it here, you see me. You know we have to be branded all the time.
Gotta always brand.
Always branded, but yeah, appreciate you guys having me on.
Look, man, thank you for your time today. I know you had a busy schedule. You just came back from the States and you came right here to be with us, man. So thank you for your time. We're gonna get up out of here, Quiana. This was a dope episode.
Absolutely.
Look, we're gonna put all of Kazi's information in the description. Make sure you tap in with him. My name is Matt Garland, NMLS number 58700, better known as International MG.
My name is Quiana Hodson, license number 317576, better known as International Broker Extraordinaire. Thank you guys for tuning in to another episode of the Rants and Gems show.
Peace.